Hello, everyone. A really massive, warm welcome to you.
Yes. Hi, everyone. It's great to have you with us.
We're just so glad you're here. Seriously, thank you for coming to watch the video today. I mean, we know you have a million things competing for your attention right now.
Work, family, whatever binge-worthy show is trending this week.
Exactly.
Yeah,
So we genuinely appreciate you choosing to spend some time with us on this deep dive.
absolutely. And settling in for a focused look at Payoneer's fourth quarter of 2025 is definitely a smart move. There is a very interesting story unfolding here.
Yeah, a story that goes way beyond just simple payments.
Far beyond.
Today, we are looking at Payoneer. And, if you're sitting there thinking, Payoneer, isn't that just the digital wallet my buddy uses to sell vintage T-shirts on eBay? You're in for a serious wake-up call.
Yeah, you really are.
Because we're dissecting their Q4 2025 earnings call today, and the company we're looking at is pitching itself as a global financial operating system.
Right. It's a complete rebrand of their utility. They aren't just moving money around anymore. They are managing the entire financial nervous system for international businesses.
Exactly. So here's the game plan for the video. We are going to start by stripping down the company's prepared remarks, the financials, the strategy, the big vision.
The polished stuff.
Right. Then we're going to get into the messy part, which is the Q&A with the Wall Street analysts. That's where they really try to corner management on the hard numbers.
Always the best part of these calls.
It really is. But let's start with that presentation summary. What is the big headline here?
The headline is scale. Scale and a massive pivot in profitability. When you look at the financials for 2025, the first thing that just hits you is the sheer volume.
The $87 billion.
$87 billion in volume across 190 countries. I mean, to put that in perspective, that is more than the GDP of a lot of small nations just flowing through their digital pipes.
That is staggering scale. But, for a long time, the knock on these fintechs was that, sure, they could move money, but they couldn't actually make money.
Right. They were growing, but burning cash.
Exactly.
And that is exactly where the story changes in 2025. This is really their turnaround chapter. If you look back at 2023, their adjusted EBITDA excluding interest was negative $25 million.
Let's pause there for just a second. Adjusted EBITDA excluding interest. In plain English, that's basically the cash the core business engine generates before we account for, like, banking interest or taxes, right?
Exactly. It's the raw profitability of their actual operations. So in 2023, the machine was losing $25 million. Fast forward to 2025, and they've swung that to a positive $40 million.
Wow.
Yeah, that's a $65 million improvement in just 2 years. It tells us they stopped chasing empty calorie, growth at any cost, and started focusing on real unit economics.
So the business actually works now. It's profitable.
It is highly profitable on a core basis. And the wild thing is, they aren't shrinking to do it. Full-year revenue, excluding interest, grew 14%.
Right, but the number that really caught my eye, and the one the investors are definitely cheering for, is the B2B revenue.
Oh, absolutely.
Break that down for us. Why is B2B different from their usual business?
Well, traditionally, Payoneer was B2C or B to B2C. Think freelance marketplaces like Upwork or Fiverr. But B2B here means helping actual small and medium businesses pay other businesses.
Like a software dev shop in Vietnam getting paid by a marketing agency in London.
Precisely. That specific segment grew 28%.
Wow.
Yeah, twice as fast as the rest of the company. It now makes up 30% of their total revenue.
That just feels like a much stickier customer base, doesn't it? Like a freelancer might quit gig work to get a full-time job, but a business usually keeps operating and paying bills.
It creates a massive moat. And in Q4 specifically, they hit record quarterly revenue of $275 million. And that B2B volume actually accelerated to 21% growth in the quarter.
And clearly, management believes in this story because they are putting their own money behind it.
Yeah.
They repurchased $175 million in shares in 2025.
Yeah, and $80 million of that was just in Q4 alone.
That's a very aggressive buyback.
It is. It's the CEO, John Kaplan, and the CFO, B. Ordonez, basically signaling to the market, we think our stock is cheap and we are going to buy it before you do.
Okay, so the bank account looks healthy, but let's look at the future. Kaplan and Ordonez laid out a strategy that relies on three main pillars. The first one is AI first. Now, I have to be the skeptic here for a minute.
Sure.
Every single CEO in 2025 says AI first. Is this just fluff to pump the stock price, or is it real?
I was totally skeptical too, but they gave specific tangible examples. It's not just slapping a customer service chatbot on the website. They are using AI and engineering to ship code faster. They are using it in their go-to-market strategy to score leads.
Lead scoring. How does that work in this context?
Essentially, they're using algorithms to predict which potential customers are actually worth a salesperson's time. Instead of cold calling random businesses, they only call the ones the AI predicts will convert and generate high volume.
Oh, that makes a lot of sense.
And yes, they are using AI agents in support to lower costs. That huge swing to profitability we just talked about, a big chunk of that actually comes from this new efficiency.
Okay, that sounds like actual operational leverage.
Mm.
The second pillar they mentioned was the upmarket move. They kept using the acronym ICP.
Ideal customer profile.
Right. Basically, they're saying, we are tired of the tiny hobbyists. We want the big fish.
Exactly. They are hunting for stability. Larger, sophisticated businesses just churn less. And to find them, Payoneer is literally following the money. They highlighted a fascinating specific example regarding the UAE, specifically Dubai.
Oh, that step blew my mind.
20,000 foreign-owned companies registered in Dubai in 2025.
That is a massive migration of business.
It really is. Dubai is rapidly becoming a global hub for service exports, digital marketing, software, consulting. Payoneer saw this happening, built out the infrastructure there, and their revenue in the UAE grew nearly 50%.
50%.
Yeah. It proves their thesis. If you build the plumbing in these emerging hubs, the high-value customers will connect to it.
Makes total sense.
Yeah.
Then there's the third pillar, which feels like the biggest gamble to me, stablecoins. They're calling this a big bet.
It is a very significant strategic move. They are partnering with a company called Bridge, which is actually a Stripe company, to launch stablecoin capabilities.
For the listener who hasn't gone down the whole crypto rabbit hole, why does a standard payment company like Payoneer care about stablecoins?
Think of stablecoins as digital dollars that move at the speed of the internet, rather than the speed of the traditional banking system.
So no waiting 3 days for a wire transfer to clear.
Right, instant settlement. But Payoneer is doing something unique here. They applied for an uninsured national trust bank charter in the U.S.
Wait, a bank charter. They want to be a bank.
Well, not a retail bank where you get a free toaster for opening a checking account. This is a very specific regulatory vehicle. It allows them to hold and issue stablecoins compliantly within the U.S. financial system.
Oh, I see.
They are trying to bridge the gap between the old fiat world and the new digital currency world.
So they want to be the compliant, regulated on-ramp for digital money. That's ambitious.
Very. They see it as massively expanding their total addressable market.
Yeah, before we get to the Q&A, we have to talk about the 2026 guidance. They're projecting to more than double that core adjusted EBITDA to $90 million.
Which is huge.
Right. And revenue is expected to hit between $900 and $940 million. But they warned us about a headwind, a 300 basis point reduction in growth. That's 3%. What is dragging them down?
They call it finishing work. It's essentially housekeeping. First, they are optimizing their checkout business by migrating it to Stripe, which causes some short-term friction.
Okay.
And second, and this is the bold part, they are cleaning up their customer portfolio.
Cleaning up, you mean like firing customers?
Essentially, yes. If a customer is high risk or if they require way too much support relative to the revenue they bring in, Payoneer is just offboarding them.
Wow. So they're taking a hit on purpose.
Exactly. It hurts the revenue growth number on paper by about 3% this year, but it dramatically improves the quality of the business. It's a classic shrink-to-grow healthier strategy. The goal is to exit 2026 with mid-teens growth and mid-teens margins.
Okay, so that's the company's pitch. We're
Right.
profitable, we're moving up market, and we're cleaning house. Let's move to the Q&A session now, because this is where we really get to see what the analysts are worried about.
Right. The prepared remarks are the polished marketing brochure. The Q&A is the stress test.
Let's look at the first question. This came from Chris Kennedy from William Blair. He went straight for the jugular on that upmarket strategy. He basically asked, since you guys are changing how you report your segments, how do we actually know this upmarket move is working? What metrics should we be tracking? And he also snuck in a question about the long-term opportunity to expand those core profit margins.
It was a great accountability question. CEO John Kaplan took the first part, and he offered a really sticky data point. He said that customers generating over $50,000 a month, so legitimate Scaling businesses accounted for 42% of their revenue in Q4 2025.
That's a huge chunk of the pie.
And it's growing fast.
Hmm.
That number is up 10 percentage points from Q1 2022. So to answer Chris Kennedy's question, the metric to track is the customer mix. The big fish are taking over the pond. Kaplan also promised they'd keep sharing ARPU, average revenue per user, so analysts can track this progress.
And what about the margin expansion part is question?
CFO B. Ordonez handled that one. She emphasized the plan to double core adjusted EBITDA to $90 million in 2026. Her confidence there comes from three things. First, unlocking leverage, meaning revenue grows faster than expenses.
Right.
Second, growing the top line. And third, that AI-first efficiency strategy we discussed earlier. She basically told the William Blair analyst, we have a very long runway to make this machine more efficient.
Excellent. Next up, we had a question from Nate Venson from Deutsche Bank. He was looking at the marketplace business, the Amazon and Upwork side of things.
Right, the legacy side.
He noted that volume there seemed to decelerate a bit, but management had mentioned an intra-quarter acceleration. So he wanted clarity. Was that real or just spin? And he followed up by asking about their confidence and visibility in hitting that mid-teens exit rate for growth in 2026, given all the moving parts.
This was really a question about seasonality and momentum. B. Ordonez admitted that October and November were soft.
Which they said they expected, right?
Correct. But she highlighted that the holiday season was strong, with mid-single-digit growth in December. And crucially, that momentum carried over into January and February of 2026, accelerating modestly.
So it wasn't just a brief holiday bump. The trend line is actually moving up.
Exactly. And regarding the confidence for 2026, she was very firm with Deutsche Bank. She cited the significant acceleration in B2B, that 21% growth in Q4.
Yep.
She also pointed to new enterprise partners coming online. She dropped names like Airbnb, TikTok Live, and Best Buy.
Those are massive partners.
They are. And she clarified that the headwind, that 3% hit from the strike transition and the portfolio cleanup, is entirely front-end loaded.
Meaning it hurts the most right now at the start of the year.
Right. So as they move through the year and lap that impact, the natural growth rate should just show through, allowing them to accelerate right into that mid-teens exit rate by the end of the year.
Got it. Short-term pain for long-term gain. Finally, we had a question from Sanjay Sakrani from KBW. He wanted to know about that bank charter application we mentioned, specifically the opportunity there and the timeline. And then he threw in a curveball, asking how tariffs and policy changes affect the business.
The bank charter response was fascinating. B clarified again that they aren't trying to become a traditional retail bank to compete with, say, Chase or Wells Fargo. This is a highly strategic move specifically to issue and manage reserves for stablecoins in a compliant way.
Right. It's about integrating digital currencies into their existing fiat ecosystem.
Exactly. And then on the tariffs, this is where I thought CEO John Kaplan had a really counterintuitive take. Usually companies complain bitterly about tariffs creating uncertainty.
They do, but Kaplan argued to KBW that shifting tariff landscapes are actually an opportunity for Payoneer, which is wild.
It is a standout moment. His logic is that as Chinese sellers face tariffs, they don't just stop selling, they globalize. They move production to Vietnam or Mexico. They start selling into Europe or the Middle East to avoid the U.S. tariffs.
And when a business goes global like that, their finances get messy fast.
Precisely. They need a financial operating system to handle the new complexity. Kaplan essentially said that complexity drives customers directly to their platform.
He even mentioned the upcoming meeting between President Trump and Chairman Xi in April, right?
He did. And just to be clear for everyone watching, we aren't taking any political sides here. We are just impartially reporting on the viewpoints shared in the source material.
Right, we're just conveying management's perspective on the call.
Exactly. And Kaplan expects that whatever clarity comes from that April meeting, even if it's tough news on tariffs, it will eventually be a long-term tailwind, because businesses will inevitably adapt, and Payoneer is the tool that helps them adapt.
That is a very chaos is a ladder mindset.
It fits their narrative perfectly. They are the infrastructure for global trade, regardless of which way the geopolitical winds are blowing.
So we have parsed the financials, the strategy, and the analyst interrogation. Let's wrap this up. If you are watching this and trying to synthesize everything we just heard, what are the big takeaways?
I think there are three main themes to take away from this presentation in the Q&A. Theme one is definitely the pivot. Payoneer is successfully transitioning from just a payment processor for marketplaces into a true financial operating system with a heavy focus on B2B and enterprise. The move-up market is real, and the data absolutely supports it.
I agree. Theme 2 has to be the discipline. Financial discipline is paying off big time here. They swung from a loss to a $40 million profit in core EBITDA, and they are buying back shares aggressively.
Right.
That signals that management truly believes their stock is undervalued and that the business model is working.
And theme three is innovation. They aren't sitting still. The integration of AI to lower costs and their regulatory first approach to stablecoins, getting the bank charter, partnering with Bridge, it shows they want to own the infrastructure of future payments, not just rent it.
And if I can add a final thought, it feels like resilience is the underlying story of this entire call.
Absolutely. Despite all the macro noise out there, tariffs, interest rates, soft months, the underlying volume and that sticky B2B adoption suggests that once a business starts using Payoneer, they stay. It's a very durable model, something for you all to maybe explore further on your own.
Well, there you have it, a complete breakdown of Payoneer's Q4 2025 earnings. We hope this helped you connect the dots on what is really happening behind the ticker symbol.
It was a pleasure analyzing it.
Thank you so much for watching. If you found this valuable, if you learned something new, please do us a favor. Click that like button, share this video with a friend or colleague who needs to see it, and subscribe to the channel. We have a lot more content coming your way, so stay tuned. See you in the next deep dive.